before I go into my discussion, I just want to respectfully disagree with some comments made by some of my colleagues about, fintech and digitization being a bit too expensive. I think also that certain sectors do not use them. I think it basically has to do with providing the kind of services that these people in the various segments are interested in using. And I will be giving some examples from my presentation. So basically, we start with our own perspective on what digitization is. And one of the things we put here, the operative word, is that digital transformation is the integration of digital technology into all areas of a business, fundamentally changing how you operate and deliver value to your customers. So that value is the operative word. Once you have value delivered in any of these areas, it's the value proposition that sells it. So we would look at what has happened across the world, bringing value to even the underbanked, the unbanked, the bottom of the pyramid, and changing the way they look at technology. Basically, a man, Bill Gates, once said in the early 90s that banking is necessary, but that bankers are not so necessary. I think what he was actually alluding to was that digitization at some point along the chain will actually take out a lot of functions that the traditional banking system has been used to. And we are beginning to see that now, and we would discuss a lot of it. Next slide. Okay, so basically, what has been the role of fintechs in the business that we do? A lot of people would see that over time, in fact, in the last 3 years, we've seen a huge move from the traditional way of doing business. Basically, this aggregation has happened across banks, especially in the consumer banking space. PwC this year spoke to some financial executives in the US, and 73% of them said that disaggregation would actually be a big problem for banks in the consumer banking sector, leading to concerns around their margins, leading to concerns around their market share, leading to concerns around even security of their data. Why is this important to us in Nigeria? Now, for those that have seen what has happened overseas, I'll give a clear example. Alibaba, in 2004, Tencent actually had started a particular transaction on their site where they started using technology for payments. And a lot of banks opened their system to these payments. Forward 2018, 680 million customers in China were doing most of their businesses on those systems. And what we had seen was that a lot of banks had been disintermediated. So what we had now was that banks, we are no longer in charge of a lot of the accounts, transactions, loans, deposits in China. And this is what we are beginning to see across the world, even in Africa. Next slide. There is something that McKinsey says, which has an effect on what is going to happen in banking. For those that read the Bible, there's something they call the 4 horsemen of the apocalypse. You know, pestilence, war, famine, death. What McKinsey, the consultants, say is that there's going to be 4 horsemen of the apocalypse. What they are looking at is that this intermediation is going to lead to the death of most banks. Unbundling will lead to the death of most banks. Commoditization and invisibility. Now, I'll just take a few of them, and I will tell you how it has an effect on what we are doing and what Fidelity is. Because remember, what our pitch is how can we collaborate with you if you are a fintech? What can we do together to build a bigger pie, to build a mutually beneficial relationship? Now, in terms of disintermediation, of course, you know that a lot of companies now, what they have done is they've simply just extended their services to their customers. So an Amazon tells its people that there's now an Amazon Pay. You do not need to go to the bank. You save with us, you're able to make those payments. Alibaba, Tencent started with WeChat. When they saw that they had built that capacity, they extended it to WePay. Saw that they had about 400 million users, they now extended it to WeBank. Totally intermediated the regular banking functions. That is actually beginning to play out even in places like Nigeria, where you have the Conga Pays and all of that, even though at their infancy, but those have the capacity of, or the potential of actually causing those same issues. We look at invincibility. Basically, I tell people, as you go further in the business that you do, a loan is a loan is a loan. Anybody that wants to take a loan does not need to know whether that loan is coming from Bank A or Bank B. Basically, all the person wants to know is, are the rates good? Is it convenient? Are the services seamless? How do I get my money? How do I pay? Convenience. So what we are seeing is that across the world, you know, the rise of peer-to-peer lending, we see the rise of a lot of these things that are in effect creating a shift away from traditional banking services. This is something we see every day. As head of retail bank, I can tell you on a daily basis we see new companies coming up, and people will not ask where these companies are or what. They will just look at how effective are these companies in delivering the service they have proposed to deliver. Commoditization, basically, what people are seeing now is that banks are just the same services they are rendering. Everything more or less is a commodity. So the difference from Bank A or Bank B, it is just the value I can get from them. Finally, there is an unbundling, and that is very important. That is unbundling, I would say, started off with insurance companies and has come to the banks. So more than before, you see various fintechs taking specific areas of the banking process and creating a lot of value around it, and then just moving those customers from the traditional banks. You look at what is happening in the financial inclusion space. This is something that a few years ago, financial inclusion was just an arm of banks. Today, a lot of banks are beginning to rethink that process. And again, I refer to what Bill Gates had said. A few years ago, a computer was a computer until you got the Microsofts of this world that looked at software as a product. You got the Intels of this world that looked at chips as a product and formed industries around this. This is what is happening in the financial sector and increasingly in Nigeria. So you have companies that are specifically focused on crowdfunding. So the farm crowdies of this world, the Raise of this world, a lot of them are raising money and they are dragging the customers with them. Within the consumer credit sector, you also have those that are focused on power. Right now in Lagos, for those that know, if you want to get power, borrow me power, you're able to get your power loaded. And is going to continue to, unbundle specific market, and they're going to target specific customers. What does that do to the bank? Remember, a lot of banks, or all the banks, have to think of regulation. These guys are very thin on regulation, for want of a better word. They are also very nimble. So 1, 2-man, 3-man organizations. That is why I said I respectfully disagreed with what some of our colleagues were saying. In my dealings with a couple of them, they are SMEs. Many of them are SMEs. Many of them use shared platforms. What they bring is their intellectual capital, and they're able to deploy very quickly. That is the truth. If you go to the revenue collection space, where I have dealt with in the last 20 years, and I have actually worked with virtually every state government in deploying solutions, I can tell you that those that succeed, in fact, when I was coming up, I saw 2 of the customers that we took from startup, and they are quite strong now. I saw them on the board. I saw some of them outside, and I said, they started as SMEs, 1, 2-man organizations. Today, they are in 26 states, some in 20. It is the value you bring. Now, how do we partner with you? Fidelity looks at its business as that of banking. We are a technology-focused bank, but we are not a technology company. So the first thing we're looking at is we want to partner with you to co-create. There are several areas around co-creation. We come up with either the ideas, we come up with the market, you come up with the technology, we co-create. And then scale. We're able to move very quickly. We've done that with a couple of people, and we want to do it with many of you in the room. We look at collaboration. Many of us are in the areas of shared platforms where we've already introduced our products to the market. We want to work with you. We want to work with you in expanding your proposition. We want to work with you on the value that you bring. We're able to work with you across the strata, so from government to you to the customer, or across, because one of the major areas of concern of many of our fintechs is also in the area of regulation. So we want to work with you across regulation, we want to work with you across the value you bring, we want to work with you across the ideas we know from the customer, because a lot of these things that you're going to give to the customer, we have the base. We have the interactions with many of them, and we're able to refine some of your value propositions. The final one is competition. We're going to work with you in creating, right now in Fidelity, we have a digital lab. In fact, it's almost like a commodity now for most banks to have a digital lab. But we're doing ours with a little bit of a twist. The digital lab is working, but also collaborating with various parties. We've been able to introduce a lot of products into the market this year, some of it on lending, some of it on the QWERTY banking, which we're proud to say we are the first to launch. So our pitch for you really today is that there is a huge market, 200 million people spread across 923,677 square kilometers. There is value. A lot of the value has not been tapped. 37% of Nigerians are not banked. A lot of the technology around that can be originated by the smallest of fintechs. The value is what we are interested in. And with that, the financing, the market access, and all of that, we would work with you in ensuring that that is done. Thank you very much.
Thank you. Thank you very much, Mr. Madiebo, for the contribution. All right, we are gradually winding down day one. But there are two things that we would like to do before we leave. As you would see on the program, we were supposed to actually split into Hall 2 for those who wanted to listen to the use case of fintechs in Nigeria. And that's a story to be told by Emeka Okoye, semantic architect at Semantics. But what we're going to do is that we're going to actually listen to him now and then take the last panel, and then we're done. So I crave your indulgence so that we can take those two and then we're able to round up day one. So on that note, I'd like to now welcome Mr. Emeka Okoye to speak to us for just about 10 minutes, and then we'll move on to the last panel for the day. Oh, okay. Sorry, I was looking for you. Please put your hands together for him.
Yeah, hi, good afternoon. Unfortunately, they just gave me 10 minutes, so I'm hoping I could make it. I thought I would be given 2 hours, so please. Okay, so my name is Emeka Okoye. I work for a small company that developed a piece of software that manages ATM transactions. Next slide. So what it does simply is just to manage electronic journals from ATMs from multi-vendor environment. A lot of the banks have issues about managing data that comes out from ATM. And basically it's to see how to improve the customer experience, solve dispute issues, solve cash issues as well. And we had our first version, which we put on 2 clients, which 2 clients are using. This version has key modules like, cash manager, dispute manager to manage those disputes. And it had what we call a 3D browser. Folks in the banks know that there's always issues between the switches, the core banking system, and then the ATM. At times, they never report the same things. So you really need to sync these 3 elements and solve dispute issues. 2 of our clients are in 33 African countries, so they are operating this in 33 African countries. There are 12 currencies, 3 languages, 3 time zones, and over 6,000 ATM. So it's working live. We are dealing with 4 different ATMs, GRG, NCR, Winkle, and Diebol. Now, what this application does is simply to alert key personnel in these banks of these discrepancies, cash balance. There's a lot of fraud we've noticed, between the vote and the ATM, and also disputes, cash that doesn't come out to customers, and those that their accounts are debited without cash changing hands. So it does that. Now, it also has a module that takes care of SLAs, so you can manage SLA. For instance, the application makes sure that transactions happen in less than 20 seconds. Anything beyond 20 seconds, it kicks off an alert to key personnel that you've set up, and then they'll try to investigate what happens. Oh, sorry, I'm not done. Yeah, so then we have new modules that monitors ATM machines, especially the temperature and moisture, because they could affect machines, especially on weekends where ATM machines are placed in places where officials of the banks are not always there. So officials need to be notified of any change in condition. Next slide. Okay, so one thing we noticed when we deployed our first version is that every transaction is a data story. And it has everything about, the network transaction and all that. And that story is key for developing products, changing organization, providing good customer experience, and improving operational efficiency, as well as profitability. So we started building our next version on this premise. Data could be mined for customer insight, like I just mentioned, and you could, for organizations that have product development lifecycle, they could latch on it and create products that fit within the segment of their customer base. We also leverage on artificial intelligence and machine learning to predict when machines are going to go down. We actually learn this information from the transaction. Like I said, every transaction in the ATM is a story that every bank needs to take advantage of. Now, we can also predict cash demand. And this is actually like a science. So we figured out that probably during rainy season, many people don't go to the ATMs and all that. So we built infrastructure for us to monitor when the rains are going to come. We also know competitors' banks' ATM position. If the customers are not coming to your ATM, then they are going to your competitor's ATM, right? So then we also have visual insight to everything, the end-to-end in the ATM space. Next slide. Okay, so intelligence is required from our data. So like I said, we had a semantic repository. So we can bring in data from weather, other banks' ATM, open data, elections. You might be wondering why we need election data. Yeah, because most likely, people that voted are most likely your potential customers. So then we also do predictive analytics for maintenance. We already learned from electronic journals when machines go down, go up, at what temperature or what situation and all that. So we have algorithms that will learn from that and predict when next is going to happen. Then we also look for anomalies, so that we could decide on fraud. Like cases where a lot of cards are being swiped in machines at a particular odd hour. You might, for instance, notice at 2 a.m. that a lot of cards are being swiped in a location that doesn't even have a shopping center or something like that. So it does that. Now, at the end of the day, next slide, we end up having a database of knowledge that could be able to answer questions like this. You want to understand your customers' usage for different locations of your ATMs, what your customers are experiencing, whether your ATMs are better placed, because we also do location analytics based on the same data. Who uses which ATMs, improving your cash forecasting, replenishment schedules, then simple profitability analysis as well, and also reducing your operational costs. Bottom line is, there's so much data that needs to be harnessed from the ATM, and it could use to create a whole different product and experience. Now, we also move this same system from ATM into the point of sales terminals. So our next version of software is managing POS systems. Thank you. 10 minutes, right?
Very much, Emeka. Spot on and still quite valuable. All right, so we want to move on to the last panel for the day. So I'd like to now welcome the panelists. It's been a long day, but I hope it has been useful. It's been very valuable to us all. So this time we'll be talking about digital transformation, not just a tech conversation. So where are we extending this to? And to moderate this panel, we have Samuel Oluyemi, Head Vertical Market at NIBBS, which is the Nigerian Interbank Settlement System. We have Averi-Thomas Moore from Company Builder Associates, or rather Company Builder Associates at Accion Venture Lab. I believe she's here. She was here. Are they here? Okay, yes, please come. As I mention your name, please come to the stage. Adia Sowho, MD Mines Nigeria. I can see her there already. Wonderful to have you. Mary Aina, Director Canada Imperial Bank of Commerce, obviously from Canada, and Kazirim Nwuke, Chief New Technologies and Innovation at the United Nations Economic Commission for Africa, all the way from Ethiopia. All right, thank you all for joining us for this. And Samuel, I'll hand over to you to take over the panel.
Let me say good evening to everyone still present, because when you have a program like this holding towards the end of the day, it's very hard to have people around. And I think Richard has done justice to whatever we have to talk about here today. Why did I say that? Because it's brought the Nigeria perspective to the issue of digital transformation, and it not being a tech conversation alone. And from the perspective of the organizers, I'm tempted to ask the question, how many non-fintech practitioners are here gathered with us today? Because fintech is not just there for the sake of it being there. It's a matter of saying it's a conversation between counterparties, dependencies, and institutions that have to work with themselves to ensure that whatever information you have, whatever gaps you have in terms of service delivery, you are able to cover it through collaboration, through discussions, through conversations. But there's no way you sit in the comfort of your room and be talking to yourself and expect the entire world to hear about it. And to us at NIBBS, for instance, we feel that the only way that fintech can make the significant impact that is being expected of it is for you to ensure that all the counterparties are brought together to discuss. When you discuss, you are moving from the requirements of the counterparties to develop the applications, the softwares, and even the tech infrastructures that you have to put in place. Unfortunately, in Nigeria, the issue of non-availability of data is a thing of the past. I'm sure Efina has spoken, or they will still speak later in the course of the conversation here. Efina will tell you that there are a lot of information that are out there that the fintech can leverage on to improve our service delivery, to even know the sector of the economy to focus on. What has been said here this afternoon, we brought a lot of professionals to the table here to ask, if Nigeria is priding itself in identity validation, we've made so much progress, we can trace anybody in the financial system through the BVN, for instance, the national identity number is there, the driver's license is there, the international passport is there, the voter's card is there for you to use as a means of identifying people, implying that there is no way anyone could escape from the watch list of any form of fraud or attempted fraud in Nigeria. But I have the panelists here to rub minds on what has been done in other climes for us to be able to appreciate that, okay, Nigeria may still be either scratching the surface of the fintech opportunities. And so I'll start from my left by talking to Mary. Is there anything that needs to be brought to the table for us in Nigeria to even improve on digitalization and even expect the benefit of digital transformation within the space of the experience she has gathered in the course of her professional exploits? And I'm sure by the time Mary is through, we'll be able to talk of issues of identity management, we'll be able to talk about issue of consumer protection and even transaction enhancement as we proceed in the course of our discussion within the short time we have to discuss here. I hand over the microphone now to Mary. to give us experience on why digital transformation goes beyond tech discussion or tech conversation.
Thank you very much. So one of the things that I've heard about today has been about data and having data available. I feel like data in itself is the new oil, because once you have that, you can basically do anything. So you talked about fraud and capturing fraud and trying to stop things. And Mr. Okoye spoke earlier about ways to identify things that are happening based on patterns and data. So we have that going on in Nigeria right now, so that's a really good thing. And we're on the right track. And the one thing we never give ourselves credit for is that we're doing so well in Nigeria. So with regards to technology and using things, we've done a lot with the mobile payment systems in Nigeria, having your mobile phones do basically everything for you. You can pay your bills through your phone, you can send money through your phone. That is something that we also have elsewhere, and it's coming in Nigeria now. And a lot of other things that we've done with technology within the banking system and within payments in particular has been really good.
Okay. Thank you. I think it's easier for us to praise ourselves when we sit with ourselves. And so as much as we are here, we still believe there's still a lot to be done. But maybe the perspective of Adia in this respect will be different. We should be praising the effort that has gone into whatever we have in Nigeria as far as data management, data mining, data. Okay, she has a microphone already. So, Adia, please.
Thank you, sir. I think, yes, some strides have been made. Positively, I think the initiation of BVN and SIM registration and the release and availability of that data has definitely supported the industry. All right, so at Minds, we've just disbursed our millionth loan. And even though that number sounds big, given the number of adults that require credit in Nigeria, that's actually, it's not even a drop in the bucket. It's barely scratching the surface, right? So when you look at developed markets like the US, where something like 50 to 70% of GDP is done on credit, you know, you start to use your imagination about how much of Nigeria's economy should be supported by credit, all the way from consumer needs to business needs, right? So, I mean, we started, but there's definitely a very long road ahead of us. And I think it's important to have the discussions about what digital transformation means with technology, as well as everything else that has to work around the technology, right? Because if you just put technology in an organization that isn't ready for it, understands it, or is interested in it, it's just going to be something you bought that's rotting on a shelf. So I think this is a good conversation to have right now.
Thank you very much, Faith. The beauty of what she's just spoken about is the fact that credit administration is becoming something of primary importance to us in Nigeria. And we want to be sure that the moment I'm exposed to you as an individual, you will not escape the radar of watching over what you do. You cannot take a facility, for instance, from Bank A and abandon those accounts and move to another bank and continue operating as if nothing has happened. The BVN, like she has mentioned, has become a means of watchlisting customers of the banking industry, of which we can say today that over 35.7 million Nigerians are registered or enrolled for the BVN. And so if we have 35.7 million, that is translating into cross-sectoral usage, because today the capital market uses the same information, the pension industry uses the same information, and then the insurance industry, everyone wants to use the information that is trustworthy. And so in digital transformation, we are talking about trustworthiness of information and trustworthiness of the identity of the individual. But I'm sure from this perspective too, the experience of the United Nations Economic Commission for Africa, which Nwuke is here to present to us, will help us. Is it really of any importance when we talk about the ID management system of Nigeria? Should it be hinged on a national infrastructure? Should it be hinged on a private sector infrastructure? Or should there be a convergence between both the public and the public sector information that we have to ensure that we have the desired transformation that FinTech are really driving. And so I give the microphone to Nwuke here to speak from the perspective of the United Nations Economic Commission for Africa. Thank you.
Thank you very much, Mr. Moderator. Good evening, everyone. I would like to thank Dr. Aina and his colleagues for making us a part of this very important event. We applaud what we've seen so far, and we want to wish him continued success in trying to promote FinTech, both as an innovation and also as a use technology on the continent. I'd also like to applaud those who put together this panel. I think this is the most gender-balanced panel that I've seen today. So I'd like to associate myself with whoever put it together and to applaud them for being gender sensitive. Many of the presentations today have talked about ID systems as integral to a thriving FinTech ecosystem or financial system. But we know that over 500 million Africans do not have IDs, that you have 33 million people or 37 million people in Nigeria out of 200 million. It's just about a third, which means many people still don't have workable IDs. And so it becomes very critical that you have to provide IDs to people, digital IDs, that digital IDs can make it possible to build a more inclusive society. Why are digital IDs important? They're important because they reduce transaction costs. They make it easier to trace goods and services. But even much more importantly for us on this continent, over 11 countries have ratified the African Continental Free Trade Area, creating a huge economic space for transactions, which will need financial interventions, which will make it easier for cross-border trade to take place, for there to be cross-border payments. So digital ID then becomes very integral to efforts to promote innovation in the financial sector. And then by FinTech here, we do not mean ATMs and checkbooks, which are financial technology too. We talk about innovations, in third-party innovations in the financial sector, so that we do not, both say the same thing, financial, but let us not conflate the two. Now, why is digital ID important? Digital ID is important because it will make it easier for governments to do quite a number of things. And now let me illustrate using the example of the Adia system from India, which is a biometric ID system that basically builds a foundational digital ID system upon which then you have the application programming interfaces where people now build innovators like we have here in the room, now build FinTech or build apps, other innovations on that foundation. And how does the Adia system work? It works simply by collecting very basic biometric information, and so it's supported by government. It's very, very expensive, so the government built it. So in India, the government is the provider of the digital ID. What we find in many African countries is perhaps a kind of mixed system of providing digital ID, where in some cases, banks provide the digital ID like you have in Nigeria. And in others, governments provide the digital ID system. But in India, what the government did, using support from Infosys, was to build a foundational ID system, upon which, and that is other apps or other applications have been stacked on. That's why we talk about the India stack. So, to promote FinTech, given the large number of unbanked people on the continent, it will be important to actually work on the digital ID system. It's very, very critical. On the continent, many countries are introducing digital ID system haphazardly. And in many cases, you have governments or countries that have now into technology lock-in and making it very difficult and expensive for them to basically move from one technology to the other. So the program we at the United Nations, along with the African Union, are trying to do is to actually promote an open system where there wouldn't be technology lock-in, that will be based on open source software that will make it easier for governments actually to advance digital ID system. Many of our governments also don't have the capacities. Many of the systems are not interoperable. So one of the things you have to do in order to promote fintech, you don't build this version, for, that is technology contingent. You basically have to make sure that what you develop is technology neutral and vendor neutral. So that's the importance of the digital ID system. And so we cannot really talk about fintech, or advancing the frontiers of fintech without bringing in the digital ID system. Thank you.
Quite interesting to hear the United Nations Economic Commission for Africa supporting the initiative of saying everyone need to adopt the digital mode of identity validation. But quite honestly, we know the basics is for us to move from analog to digital. And so having moved from analog to digital now, we are now saying for every individual, wherever you go, whatever you do, digital means of identification should be explored. But does it just come easy? It doesn't just come easy, and I hear Richard of Fidelity Bank saying he disagrees with saying it's expensive to have fintech approach to anything to adopt fintech. It may not be expensive, but the fact is a lot of exploitation is still going on at the level of application development and even software procurement all over Africa. But if you have the cooperation of an institution like the UNECA saying that digital ID is the way forward, then we are talking of support too, because most African countries depend on donor agencies, grants, and so on to develop competencies that will move the nation forward. And so we trust that with the cooperation that the FinTech Nigeria is having and FinTech Africa is having with United Nations Economic Commission for Africa, the necessary support for us to move the digital ID into actualization across African countries without recourse to the dichotomy between Francophone and Anglophone African countries will find fulfillment one day. But beyond all this, the fact still remains that who are we putting first? Is it the pocket of the fintechs that we are putting first in terms of the financial gain, or the consumer that we are putting first? It's more of, let's look at what the individuals want for us to be able to propel or propagate the fintech ideology. And so sure, the experience of Averi-Thomas more will help us here to even appreciate the fact that we need to put consumer first in whatever we are doing as fintech and digital adaptation is concerned in Africa and in Nigeria in particular.
Okay, thank you. So I work at Accion Venture Lab, and we are a seed stage fintech fund that focuses on furthering financial inclusion through innovative startups. And so one thing that we really look at that ties back into this is what is the balance between tech and touch that helps startups be able to digitize their customers, and really any company. So if you look at the customer journey, right, there could be all these touch points you have with your customer. You have to acquire them and onboard them. You have to analyze them and make a decision on what service offering is appropriate. You have to provide follow-up service and so on. And what we've seen in our portfolio are great examples of companies who have found innovative ways to make that balance. For example, using Adia, we've invested in a company in India called Toffee that provides insurance for people who buy bikes. So it's a very targeted insurance package for people who buy bikes. They leverage the infrastructure of the bike dealers to lower their costs. So they use that existing infrastructure. They use Adia to KYC. So they leverage that. But because of the trusted brand names that they've partnered with, they get to use that existing relationship to sell their product. And so they don't need an agent network. They are just incentivized as salespeople of the bikes. So what we are seeing a lot in our portfolio are that the companies that are thriving, expanding access to financial services are ones that have found innovative ways to be able to connect with customers and help them understand these new products in a way that's appropriate and in a way that's low cost by finding other infrastructure that they can also leverage in that effort. And as we go on, I can give some other examples of things we've seen to that end.
Incidentally, time is not on our side, and I would rather appeal for us to at least elicit some reactions or further information from the panelists as far as if there are concerns that you have, as far as what we've said is concerned, so that we don't take much of your time. But what I hear everyone on this board saying is that beyond fintech conversation, don't leave your target customers or target users out of the discussions that you are holding. Identity management has gone beyond come and present a physical instrument for me to identify you. Let me be able to use your iris. Let me be able to use your fingerprints to be able to identify you. Do you need to complete a form for you to subscribe to a service? No. The moment I'm able to access an existing database of information of an individual, I should be able to at least give the necessary support, knowing fully well that trust has been built, convenience is being offered to the customer, and at the same time, the necessary cooperation and collaboration between the developers of some of the applications that will drive the financial inclusion that everyone was talking about is available. We know we can move forward. And the beauty of it is, we know there is no African country that can do it alone. We have to work as brothers and sisters to move our continent forward. And so in that respect, I will invite interventions or questions from the floor that will enable any of the panelists to respond to whatever concerns you have as far as digital transformation and the imperative not to make it a technology discussion alone is concerned. Any question, intervention from the floor? On that note, is there anything that anyone wishes to contribute as far as the discussion is concerned, so that we can just bring this to a close then?
Yeah, I just wanted to perhaps underscore the depth of the market. That today on the continent, we have B2B e-commerce, quite in the millions, if not billions of dollars. We have digital trade that is now worth about $300 billion a year. That's expected to grow to $300 billion by 2025. And in order to expand the trade, you will need these payment instruments, one of which will be the innovation to the financial sector. And you basically would need government intervention to build the basic infrastructure, deal with regulatory issues, deal with interoperability issues, and then also create trust, credibility, and confidence in the digital ID system. When we launched it in NIBBS 2 weeks ago or thereabout, one of the questions that one of the co-chairs, one of them, I wouldn't, one of the co-chairs is President Kagame, and the other is President Abiy, Prime Minister Abiy. One of the questions one of them asked was, who is pushing this? What's in it for us? And so there are issues of trust and confidence. And even here in Nigeria, I think you have competing, digital ID systems, and that raises the cost. Kind of gives you legacy instruments, and it makes also the fixed cost of application development very high. When you now have a very an open source and then a common platform, a foundational ID, where you collect very basic information, very simple one, then you have higher enrollment rate, and then you expand the market for innovators to develop applications and all of that. So it's important to actually work on the ID system, not celebrate the fact that you have 33 million people now registered with ID on the BVN, but actually think about a much broader ID system that is much more inclusive, that actually also extends to people in the rural areas, those who cannot read and write. Thank you.
But the beauty of that is that in Nigeria, even though in the banking industry today, there are 4 major means of identity that the government recognizes in the driver's license, the international passport, the voter's card, and the national ID. The BVN was just introduced for convenience of the financial system because a lot was being lost through fraud. And people just take it with levity that the moment I perpetrate it here, I cannot be traced. But with the implementation of the BVN, it has become a trusted instrument that is watch listing. Currently, we are at the stage of watch listing. The next stage we are moving to is the stage of blacklisting. We watch your attitudes, we watch the way your attributes. And that's why even overseas, when you move from one location to the other, you are seeing the grocery stores in your neighborhood that you are moving to. You are seeing the barbers and the cab driver putting flyers at your doorstep because they have information about you. Do we have the information that is able to transform the nations of Africa into the level of appropriate convergence of our various economies? We are saying yes. It may not be at the same level as the Europes and America or Asian countries, but a giant step is being taken by most African countries to ensure that there's a convergence of data that will aid technological advancement all over Africa and ensure that the consumer that we are ultimately looking at serving be the ultimate beneficiary of whatever software or hardware that we are all promoting across Africa. On that note, without prejudice to anyone, I would like to say thank you to everyone that has been a part of this discussion. And if you permit me, you know, in Africa we say we should give honor to whom honor is due. I'll seek your indulgence to recognize the president of the Chartered Institute of Bankers of Nigeria, Professor Nwuke, who joined us in the course of this discussion. Prof, you are welcome, sir. That's the president of our own Chartered Institute of Bankers of Nigeria. We appreciate you, and it's right beside the former president too, and the coordinator, the promoter, and the father of FinTech Africa by our own standard in Nigeria. We appreciate you once again. We thank you, Mr. Aina. You remain a father to us, you remain a doyen, you remain an icon, and we cannot but continue to remember you across the generations that will come after you. Thank you very much, and all the best to every one of us, please. Thank you.